Thank you. Thank you very much, Raleigh. Thank you, everyone, for attending today, taking time out of your busy day to hear this presentation. Once again, thank you to Raleigh and to Yana and all the good people at TradingPub for giving me the opportunity to speak. Today, I have a great presentation for you, which is, in my opinion, the right way to trade tops and bottoms. Welcome once again. My name is Steve Primo, as he just announced. As he stated, Raleigh stated, I've been trading for roughly 37 years now. Starting on the floor of the Pacific Stock Exchange, trading through the crash of 1987 and the great bull market that ensued after that. I've seen and traded just about every method out there imaginable. If you've traded it or if you've seen it, I've actually traded or really dug in detail what the method is. I've traded through every market environment, from straight up to straight down, to bullish, bearish market environments, to dead markets where there's actually no movement. And as Raleigh stated, I left the floor to pursue my own trading account and to manage money. And I was asked later to be the director of education for a number of websites. But ultimately, I was asked to teach and just to mentor students my own techniques, things that I currently use in my own trading. So that's what specialist trading is. We are first and foremost an educational company. Even though we provide all of our members and students with strategies and techniques for trading just about any market environment or any market you could be interested in, it's really more about empowering you with all these tools so that ultimately you can make your own decision. It's my opinion, over 37 years of trading, that the reason why so many traders lose is because you're basically relying on an outside source, either some trading guru or some system or someone on TV to tell you what to do. And that'll work for a while until it ultimately doesn't work. So we're trying to empower you with things that have stood the test of time, and hopefully you'll be able to learn these and then just go out on your own, so you won't have to rely on anyone or anything to tell you or make your trading decisions for you. Now, before I begin, I hope you can see this. Where I'm posting my disclaimer right now. We're required to show you this. If the slides aren't moving, please let me know, but you should be seeing our disclaimer right now. I'm going to show you a lot of performance results showing you this technique on how to properly trade tops and bottoms. But please, remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. Also, I'd like to mention, I know they have a lot of webinars on TradingPub and a lot of different styles in which to present. I like to present all the information as if we were in a classroom. I like to keep the questions till the very end. So I know a lot of you may have questions about, well, what does this mean, or how do we enter here, or what do we do with this? Please, if you wait till the very end, the presentation will seem to move a lot better. And many times, if you wait for the next slide or two, your question will be answered. So if you have a question, kindly write it down or try to remember it, and I promise we'll get to it at the very end of today's class. Okay, so keep any questions till the very end of the presentation. Also, I'd like to invite each and every one of you to follow us on Twitter. As you can see right here, this is our handle, at SPCLSTTRADG. That is our Twitter handle, and we give and post a lot of great free information on Twitter. We give signals. Currently, we were along the market up until just a couple of days ago. We had a great signal to go along the E-mini and the entire market altogether. We posted it last week, and then we a day or two ago we said we were currently flat, and so we missed this nice move to the downside. So we give a lot of great free information, and I invite all of you to follow us on Twitter. Okay. Now, as I stated earlier, specialist trading is first and foremost an educational company. I really believe what's keeping you away from becoming successful and consistent in your trading is sound education. I know this firsthand because what a lot of people think is once you're trading on the floor, you basically have a license to steal. Everybody is a multi-millionaire and you make tons of money. Well, I'm here to tell you that that's not true. In fact, my first 2 years as a specialist, as a trader on the floor of the exchange, I didn't think I was going to be around for much longer because I couldn't really make ends meet. I think I probably traded the way 99.9% of all traders trade. In other words, I was trying to pick tops and bottoms, and this would work fantastically. I'd have about 4 or 5 trades that really worked well, and it was always that 6th or 7th trade where I gave everything back, and I basically lost everything and broke even or even lost more. And I continued to do this for my first year or so of trading, and I couldn't make ends meet. And it was very depressing, and it was very tough to handle, of all the hard work I was putting in, reading all the things that were supposed to make you successful and consistent, just didn't work all of the time. It worked great, but when the market conditions changed, it seemed to fail miserably, and then I would just lose everything I made. I'm sure many of you are experiencing the same thing or have experienced this. And it's very discouraging. You start to wonder whether it's worth all the hard work that you're putting in. And I know exactly what you're going through because I've been there myself. In fact, I really thought that I was probably in the wrong line of work. It wasn't until I met my own mentors, these were specialists who had been on the floor for a good 20, 30 years, that were able to turn my trading around. And they said that, Steve, you're relying on too many things to make your trading decisions for, on too many outside things that we've been taught, the conventional wisdom tells us that should make us successful, and they just weren't working. So they really taught me that the secret to success is stripping away all of these things that we've been told or taught are supposed to work, and keeping your trading as simple as possible. Once we do that, you'll start to get on that road, which is successful trading. And what they taught me is that, Steve, successful trading is not about making the most money. It's about being consistent. So this is what our goal is at Specialist Trading. It's to become consistent. That's what we're searching for. Every once in a while, you'll see that our strategies or techniques hit these really big home runs, but that's not really our goal. Our goal is to have more of a two-step forward, one-step back approach, where we're able to have this nice, really steady upward curve in our equity curve, our upward slope, I should say, in our equity curve. So that's really what the true meaning of success is, and that's what my goal is, to teach everyone how to trade with the Specialist Edge, which is really rooted in consistency. All right, and I'm going to really teach you a very consistent edge today. It's a great trading technique on how to properly trade tops and bottoms. This was taught to me on the floor, and this is what changed my way of thinking on how to actually trade those. So before we begin, once again, just let me state that if you have a question, for those people who may have just joined, just kindly wait till the end of today's class to ask any questions, and I promise I'll get to them at the very end. All right, so let's start out by showing how most people trade tops and bottoms. And I know this firsthand because this is the way I used to trade. I'm going to start off by showing you some older slides as well, by the way. I'm going to show you slides that are maybe a year or so old. Don't worry, we're not trying to cherry pick. They're just for educational purposes. At the last portion of this presentation, I will share with you slides that are very current within the last couple of weeks and some as current as today. All right? So let's show you how most people trade tops and bottoms. Usually what we do here when we start, let's start with stocks because we know we have a lot of different traders here in today's presentation. All right, let's start off looking at an older chart of Apple. The way most people will trade tops and bottoms is they apply some type of tool or indicator. In this case, it's usually an overbought, oversold oscillator. What I've plotted here on this daily chart of Apple is just your standard slow stochastic. All right, I haven't changed anything. I haven't gone in and changed or edited what the parameters are of this. In fact, I don't even know what the parameters are. All I did was just hit the default for slow stochastic. Now, obviously, the way we use this is that when we go over the upper threshold, which I believe is 80, that is deemed as overbought. In other words, we are too high. We should be looking for some type of top, and when these two lines usually cross, that gives us some type of an entry point. It's the same thing when we get below the lower threshold, as we see that down here, which is 20 on this particular oscillator. If you get below 20, you are deemed as oversold, and conventional wisdom tells us that you should get ready to buy and go long, usually when these two lines cross, or whenever you'd like to when you get some type of entry point. And that's pretty much the way most people will trade overbought, oversold types of markets, regardless of market, regardless of time frame. You usually have some type of overbought, oversold tool. So it doesn't matter if it's slow stochastic, as I have plotted here. It could be regular fast stochastic. It could be RSI. It could be some other tool that momentum indicator that you're looking at. All we want is something that tells us that we are in so-called overbought and so-called oversold territory. Now, conventional wisdom tells us that when we get into these so-called territories, we should be looking to either buy or sell. As for example, right here, here's when the lines cross, so that was your buy signal, and guess what? Apple bottomed out and went up and had a really nice rally. Now, conversely, when we got overbought, the lines crossed, and we would have entered to go short now or exit our long, and we had another nice trade. So this is working really well. In fact, this is the way I used to trade. It worked fantastic. And so you want to go back into the, one more time here. We are now once again in the oversold territory. So you figure I've had two good trades. I've done very well. Let's go back and try it again. So you get long Apple once again. You figure if this keeps working the way it's working, you're going to be a millionaire by the end of the year, maybe even in the end of the month. So you get into Apple once again long, and it kind of goes lower, but then starts to bounce. So you're getting really excited about this. You're doing really well, but we haven't gone into the oversold territory yet. So you're still in the position. You're waiting for it to get into the overbought, I should say, overbought territory, so you can exit and go short. Well, the rally fizzles out, and we get down to the oversold territory again. So now you think, well, you know, it worked before, and I have a nice cushion because I've had two really good trades here, so I'll buy some more. I'll double up. So you double up, you buy some more shares, and guess what? It even goes lower. And it's even continues to be now in a new level of oversold. So now you say, boy, well, I guess I got to go all the way in now. So you buy some more, and this is probably where you've given everything back because Apple doesn't even start to bounce. So you've given everything back you made in the first two trades, and you've actually even lost more, and you continue to hold on to the positions. Does this look familiar to anyone? It doesn't have to be a stock. It could be the Forex markets or the E-minis. In fact, I'll show you how this works in the E-mini market as well. Let's look at an older chart of the S&P E-mini futures, and we look here. We have the same exact indicator plotted, the slow stochastic, where we have the so-called overbought territory and the so-called oversold territory. Once again, conventional wisdom tells us that when we get to these levels here and the lines cross, we want to sell. Now, this would have been a great sell right here. You would have made 20 or 30 points in the E-mini on daily bars. Once they crossed again after you'd been in the oversold territory, you could have gotten long again. So you think, once again, boy, this is a great technique, picking tops and bottoms. It never fails. You've got two really nice winners under your belt, and so you decide to go short now here because it worked before. It's going to work again. So you sell, and it really doesn't go lower, but it doesn't go higher either. So you get another signal where the lines cross over, so you decide to double up. Why not? It worked before, so you go short, and now you're losing everything you made in the first two trades. In fact, you've just about given everything away plus more. And at this point, this is where people usually start hiding their statements, their brokerage statements from their spouse because they don't want to show them how much money they've lost. And perhaps you're actually wiped out because there's no way you could make any money in this if you're trying to go short. So you see this transferred over into the E-mini market. What about the Forex markets? Well, let's look at an older example in the dollar-yen for all you Forex traders. Here's an example of the dollar-yen. As you can see, we're kind of headed sideways to higher, but the indicator is telling us we're overbought. So if we follow the standard rules, once again, what you've been taught, what webinars or books teach us, if something is overbought, you've got to short it, right? You've got to sell it. So the lines cross, and this is where you want to sell. So you sell the dollar-yen, and it doesn't go lower, but it doesn't go higher either. So you decide to jump in again because the lines crossed once more, and it goes higher, so maybe you'll triple up because it's bound to fall over. You know, there's a lot of fundamental news, or maybe some Forex guru you watch on TV is saying that the dollar-yen has to be shorted, and he's usually right. So you really triple down now, and then at this point, you've lost everything you made in the prior trades that you would have traded the Forex markets. And in fact, most likely, had you continued to short the dollar-yen, you'd be wiped out entirely because the Forex markets, when they go in a certain direction, they continue to go. They can go as much as they want. So this is the way trading overbought, oversold, or trading tops and bottoms usually happens. This is a scenario. In other words, these techniques will work until they stop working. And usually the result is disastrous because you wind up giving everything you made back previously in the first couple of trades. You make everything and then you lose it all. And so it's very similar to gambling. It's similar to going to a casino and playing the slot machines where they give you this false sense of security that you're doing well, that every once in a while when you pull the lever, you have a winner, a small winner every now and then. But in reality, over time, you really have nothing to show. You've actually lost money. It just gives you this false sense of security when you have one or two winning trades every once in a while. So it's really a gambling mentality. Remember, we're looking for consistency. There's no consistency in gambling. All right, so with all this said, I just showed you the way most people trade tops and bottoms, and this is coming from first experience here. So what my mentors taught me is they said, Steve, there is no such thing as overbought, oversold, okay? They made me repeat that. I'm going to repeat that to you as well. The first thing you have to get in your head is that there is no such thing as overbought or oversold. In fact, I would write this down on a little piece of paper and put it on to your computer or your computer screen, I should say, so that you see this every day. Because we've all seen markets where things can go as high as they want. How many times have you seen something in a scenario where something is overbought and continues to go higher and higher and higher for days, if not weeks? The same thing with things being oversold. They will continue to go lower and lower. We've all seen markets where they virtually go to zero. Even stocks have just expired at zero, or they've gone worthless. And so things can go all the way down where you never would have believed it. So you have to get in this mindset that there is no such thing as overbought, oversold. So we're never going to try and pick an overbought situation, meaning a top, or an oversold situation, meaning any type of bottom, because trust me, it's a recipe for disaster. So the title of this presentation is The Right Way to Trade Tops and Bottoms. So if there are no such things as overbought and oversold environments, then what is the right way to trade tops and bottoms? This is what I asked my mentors when they were explaining to me what I was doing wrong. And what my mentor simply said is, they said, Steve, if you want to trade tops and bottoms, the best way is just to go with them. And I said, go with them? What does that mean, go with them? So this is what I'm going to share with you today. This is a great technique for going with tops and bottoms. It's an entry technique, and you'll see how consistent this can be when you start using this in replacement of the way you used to trade tops and bottoms. So I'm going to teach you and share with you very simple entry technique for trading with tops and bottoms today. All right, so let's go back and look at our older charts again before we look at some more current and recent charts. Remember, we're looking at Apple. We're starting off with stocks once again. This is the Apple chart. We virtually lost a lot of money because we were trying to pick bottoms with this particular scenario. Let's see how we should be trading Apple. What my mentors taught me is they said, Steve, before you trade anything, you must add a simple tool, and that is the 50-period simple moving average. It wouldn't matter if I were trading a 5-minute chart of the E-mini or a monthly chart of the British pound. All that matters is that I must have a 50-period simple moving average plotted. And before you pull the trigger on whatever strategy you're trading, always ask yourself, where is price in relation to the 50-period simple moving average? Okay, I'll say that again. Ask yourself before you enter into a trade, where is price in relation to the 50-period simple moving average? And you'll only come up with two possible scenarios. If price is above the 50, then you only look to go long. You only look for buy setups, buy scenarios. If price is below, such as you see here in the Apple scenario, we're only looking to go short. So you see here with Apple, there's no reason why we would have lost money going long, because we're not even going to consider going long. All right, so we know now that the only way we're looking at Apple is to go short. So how do we trade it then? All right, well, we go back and look at this so-called overbought, oversold scenario, and we're going to exploit or take advantage of these so-called areas where we're above the oversold and we're below the, or above the overbought, I'm sorry, and below the oversold. So what you want to do is highlight or circle all of the oversold areas, as we see here circled in red. Since we're going short, we're only concerned with the so-called oversold areas. And then once we've pinpointed them, then we want to find all of the short-term bottoms that were created. Now, short-term bottoms are just those little, bottoms, that kind of a V approach, as you see here. These are all short-term bottoms that are highlighted with a red horizontal line, and they must be created while we were in the so-called oversold territory, because we want to exploit that, because at that point everyone said, well, we probably bottomed out right here in the so-called oversold territory. And once these areas are violated or exceeded to the downside, that's your entry point, what those red arrows are. That's where you would be going short. And remember, this is just an entry technique. We haven't talked about stop placement or exit, but we're just showing you how you can be in sync with the market when you're learning how to going with the tops and bottoms, as opposed to trying to pick tops and bottoms. So in this scenario, you wouldn't have lost any money trading Apple, because you would have been in sync with its overall trend. How about the E-mini? How about when we looked at the daily chart of the E-mini? It was going straight up. We lost a lot of money because we were trying to pick a top. Well, what's the first thing we do? We always add a 50-period simple moving average. We ask ourselves, where is price in relation to the 50-period simple moving average? Obviously, the majority price was above. So if price is above, the only thing we're looking for are buy scenarios. We are not even going to consider going short anything. So there's no way we would have lost money trading the E-mini going short. Okay? So we're going long. So in this scenario, this means that we're looking for the so-called, we want to highlight the so-called overbought areas. Okay? Conventional wisdom always tells us that these circles in green are where the future or where the stock or forex market is overbought. So now that we know where the so-called overbought area is, then we just simply want to identify the short-term tops, as we see here with these green horizontal lines, that were created in the so-called overbought territories, all right? And once they are violated, once we trade above them, that's our point of entry. So do you see how simple it would have been to make money trading the E-mini as opposed to trying to pick a top? We're simply going with the top, all right? We're exploiting the so-called tops and bottoms. How about the forex markets? Remember, we were getting killed looking at the dollar-yen because it continued to go straight up and up, all right? Well, first thing we do is apply a 50-period simple moving average. We ask ourselves, where is price in relation to that 50-period simple moving average? Obviously, price is above, so our only answer is we're only looking to go long. We won't even consider shorting the dollar-yen. It's that simple. This is what's going to get you on that road to consistency because you will be in sync with the overall trend using this simple tool, okay? In fact, I just want to say, to go off topic here, if I were stranded on a desert island and I could only use one tool for my trading for the rest of my life, out of all the different tools and tips and techniques I've learned, I would choose the 50-period simple moving average. It is the most powerful yet simplest tool we have for our members at Specialist Trading. And I'm sharing this with you because it's really this valuable. All right, so we're only going to be looking to go long the dollar-yen. This means that the only thing we're looking for are those so-called overbought scenarios. And that's right here, circled in green. You see those? Remember, we're looking at a slow stochastic right now. It wouldn't matter if it was a fast stochastic. It wouldn't matter if it was an RSI. It wouldn't matter if it was any other type of momentum oscillator or tool or indicator. All we want to do is we want to exploit when we're in some so-called overbought territory, and we want to look and see where the tops would have been formed in that so-called overbought territory, as you see here represented by the green horizontal lines. And once these tops are violated to the upside, that's our entry point. So as opposed to trying to pick a top in the dollar-yen and we were getting killed, now we're in sync with the dollar-yen and we're making money all the entire way up because our entry is in sync with the overall trend. We're taking advantage and we're going with the top as opposed to trying to pick a top, okay? So I showed you these older charts just for educational purposes because I want you to understand the concept. Remember, we'll answer any questions you have at the very end of the presentation. But let's look at some more recent examples. You can see how this works. You know, I just didn't cherry pick something that worked 2 years ago. I just want to show you how this works as current as a couple of weeks ago or even today. All right, so let's start out with stocks once again. First stock we're going to look at is SNDK. We have the two same indicators plotted, the slow stochastic and the 50-period simple moving average. What's the first thing we ask ourselves? Where is price in relation to that 50-period simple moving average? Well, price was below, as you can see there, the beginning of the chart for a little bit, but it then bounced above. So what do we want to do? We want to highlight those so-called oversold and overbought territories. Now we see here, let's start with the oversold. We had a low created right here, as we point out in red at the beginning of the chart here, but we never violated that to the downside. So there was never any action taken. You see, this is how the market kept us out of going short when it was the wrong time to go short. So once price convincingly crossed above the 50-period simple moving average, then we just simply knew that we were only looking to go long because we're above the 50. And now we look for those short-term highs that were created, as we have here represented by the green horizontal lines. So once we saw those, all you have to do is go long every time we violated those. And you see how simple it would have been to make some nice gains in SNDK all the way up month of May into the first week of June. How about Twitter? Twitter has been acting very downward the last couple of months. It's been acting poorly. And as you can see here, once we added the 50-period simple moving average, there is no way we would have lost money being in Twitter or trading Twitter if we were short, because the price is below the 50-period simple moving average, and that's all we're going to do. We're going to look for shorting scenarios. We wouldn't even consider going long Twitter until it has consistently closed above the 50-period simple moving average. You see how the simple rule keeps you in line with whatever you're trading. All right, so since we're only looking for short examples, we want to take advantage of the so-called oversold territory, all right, as we have here circled in red. Once we've highlighted the oversold, or we see that we're in oversold, we look for those so-called bottoms that were made in the so-called oversold territory. And once those short-term bottoms are violated, that's where we go short. How simple that was. See how easy it was to be in sync with Twitter. You know, a lot of people have been talking about, boy, I keep hoping for Twitter to turn around, and I keep holding on to it. It goes lower and lower. All of our members and students wouldn't have lost any money trading Twitter because they were looking at it from the short side. You're in sync with the market when you use this simple tool. All right, how about the E-mini? Well, when we start trading the E-mini, we can start with a daily chart, and this is going all the way up into the first week or so of June before the market started to pull back today. We have the 50-period simple moving average. We ask ourselves, where is price in relation to that? Obviously, price has been above going all the way back to March and April. So we want to take advantage of those so-called overbought areas. Everything that we've been taught by conventional wisdom tells us that when something is overbought, you have to short it. I'm here to tell you that that will work until it doesn't work. So we don't want to trade tops and bottoms. We want to go with them. So now that we've found out where the so-called overbought area is, we want to find where the tops were created while we were in the so-called overbought territory. And there were only three here if we look at daily charts, but look how well you would have done going long in these certain areas here. You wouldn't have tried to short the market. You would simply go in sync with it. Now, we know a lot of E-mini traders don't trade daily bars, so you can apply this technique to smaller time frame. Here's a 60-minute chart going back to the last week or so of May coming into the beginning of June here, all right? Now, we were below the 50-period simple moving average, but then we crossed above it. So once we crossed above, that meant we're only looking to go long the E-mini on a 60-minute time frame. So if we're trading hourly bars, we're going to exploit the so-called overbought territories, and we're looking for those short-term tops. As you see here, that's where you would have gone long on an hourly chart. See how simple that is. The same thing that worked on daily charts, works on hourly charts, or can work on a tick chart. Here's a 2000 tick chart going back about 3 weeks in the E-mini for all you intraday traders. You see here we opened below the 50 period, but we were well below the 50 the day prior to that. So we know right off the bat from the beginning of the day that we're only going to be looking to go short the E-mini. The only way you really would have lost money is if you tried to pick a bottom the first part of this day here, the first hour or two. But all of our students knew that we weren't trying to go long. We're going to only look for shorting opportunities with any one of our numerous strategies to trade the E-mini. All right? So if you wanted to use this trading technique, well, we want to find those so-called oversold territories, which are right here. All right? Once we found them, then we simply look for bottoms that are created. And this, is very simple to do intraday because, once you see a bottom created, you just simply wait for it to be violated. And you see all the bottoms that were created in the first hour of trading. All you had to do was simply sell, and look how well you would have done just being in sync with the market on a tick chart. Now, the same thing will apply in Forex. I know a lot of you are going to say, well, Steve, I don't trade the E-minis, I don't trade stocks, I trade longer time frames in the Forex. Well, let's look at the Forex market. So let's look at a weekly chart of the British pound, okay? Going back to last year, September, we consistently closed above the 50 period. So now we know that we're only looking to go long the British pound. There's no reason in the world we have been shorting the British pound this last year. Why? Because it's above the 50 period simple moving average. And we're talking on a weekly time frame, okay? We realize that things may be different if you're looking at a daily bar or even a 4-hour bar. But on a weekly time frame, we're only looking to go long the British pound starting last September. So if we're looking to go long, we want to take advantage of the so-called overbought territory. We spot them right here, and once we know where the so-called overbought territory is, we simply look for short-term tops that were created above the 50-period simple moving average. And we have roughly about 6 or 7 created here going back this past year, and look at how you could have gone long the British pound, okay? Extremely simple just to use this technique, okay? This is just an entry technique. Remember, we haven't talked about stop placement, we haven't talked about exits, we haven't talked about money management, but one of the most important things is just being able to be on the right side by using the 50-period simple moving average, and also by being able to go and be in sync by using a sound entry technique that has stood the test of time. Remember, you don't need to use this slow stochastic. You can use an RSI, you can use a fast, anything that tells you you are in so-called overbought or oversold territory. Because remember, there's no such thing as overbought or oversold. So we're going to exploit that. That's all we're doing with this simple entry technique. Now, so far, I've showed you daily bars. I've showed you in stocks daily bars. I've showed you hourly or intraday bars with the E-mini, and I've showed you weekly charts, all going back within the last month. Let's share with you a very recent example. And by recent, I mean today, this morning. Before I handed in the presentation, I was lucky enough to capture the first hour of trading using this technique. So let's look at a 1,000-tick bar chart in the E-mini. As you can see here, the date and below, it says 6/24. That's this morning. Now, we opened below the 50-period simple moving average. Then we crossed above it in the first 45 minutes or so. Then we crossed right back but down below it. And then roughly after the first half-hour trading, we were off to the races above. We know the scenario changed later on, but in this roughly first hour or so of trading, you had a number of scenarios here in which you could have traded using this technique, which I just taught you. All right. The first thing we want to do is look at the so-called overbought, oversold territories. And we see here we have a couple of oversold, circled in red, and about 3 overbought. Now remember, if we were looking to go short in the oversold, we would have had to violate these 2 areas here that are highlighted with horizontal red lines. And we never did, because those were the only bottoms that were created in the oversold territory. Okay? But now let's look at the areas, the tops that were created in the so-called overbought territory. We had a total of 6 that were created roughly in the first hour of trading. So once again, once these were violated, do you think you could have made money trading this technique? Now, like I said, I handed in to Jana my PowerPoint presentation, so I wasn't able to capture the last half of the day when the market fell out of bed. But trust me, this technique worked wonders in the last portion of the day, because you see the market really fell out of bed, and the same time period, even a 5-minute time period or a 10-minute or an hourly, you would have done fantastically to the short side intraday trading the E-mini. It's just that I didn't have enough time to put this all together. So, 2 points to remember before we go to any questions. 2 points to remember in this educational presentation I gave you. Remember, the most important thing that my mentors taught me, because trust me, I didn't trade this way. When I was trading on the floor, I traded like everyone else. I tried to pick a top and pick a bottom, and it worked great until it stopped working. And then I gave everything back. I didn't make a dime my first 2 years of being on the floor. Everyone around me was doing well, and I was the only one not making any money. I was struggling tremendously. So it was very discouraging, and my mentors picked up on that and saw how discouraged I was and started to teach me and mentor me on how to really become successful. So the 2 points that they taught me were, please remember this. There is no such thing as overbought or oversold, okay? I know conventional wisdom tells us that we have tons of indicators, we have tons of signs, tons of gurus telling us when something is overbought or oversold, but trust me, there is no consistency in that. It's similar to a gambling type of mentality. Remember, we're looking for consistency. There is no consistency in picking tops and bottoms, and I know this firsthand. So we want consistency, so we want to look for something more valid. So it's much easier to understand that there's no such thing as overbought or oversold. Things will go up as high as they want, and things will go down as low as they want. So rather than try and stand in the way of these tremendous trends, it's much easier just to simply go with them. So never ever try to pick tops and bottoms. Trust me, once again, firsthand, it's a recipe for disaster. If my mentors had not finally gotten around to changing my way of thinking, I probably would never have been a trader, and I'd probably working somewhere doing a different job altogether. So never ever try to pick tops and bottoms. They will work until they stop working, and you'll give everything back. Okay. Now, I gave you a great entry technique today, a great educational presentation, and you can experiment with this. I know a lot of you, your eyes are lighting up, and you're probably looking at charts right now to see how this would have worked. Remember, you can use this with any overbought, oversold oscillator or any tool that conventional wisdom tells you is overbought, oversold. It doesn't really matter. It can be the slow stochastic, RSI, any momentum oscillator, anything you want. Just something that tells you when the market or whatever you're trading is overbought, oversold. It doesn't matter. We just want to exploit that, as well as the 50-period simple moving average, which is a tremendous technique, usually reserved for the members of specialist trading I'm sharing with you today. Okay, so ask yourself honestly, do you think this edge could have helped your trading this past year? In fact, go back and look at your last 10, 20 trades. I can almost guarantee that the trades you had that lost money were because you were out of sync with the simple techniques that I shared with you today. Okay, so it could have probably saved you a lot of money, at least it kept you out of these bad situations. Now, how would you like more techniques like this? This is just one in a slew of hundreds of techniques that we have for our members at Specialist Trading. If I could just take a moment to share with you a great offer we have for all the attendees today. This is our Secrets of a Stock Exchange Specialist video seminar. These are the training sessions. And what it is it's an actual seminar where I spoke in front of hundreds of people. I was asked to speak in Denver, Colorado. And what they did was they videoed and recorded my presentation. So we have 3 hours of great more techniques and tips and techniques such as what I shared with you today. I go over all these different things, as well as we share a full-fledged strategy. In this particular 3-hour tape, I give you a full-fledged strategy. Let me just show you some of these entry points we've had using this strategy. This is strategy number one of our most consistent strategies. These were all signals generated using strategy number one that all of our members who are in the strategy number one course could have taken, and you can as well if you decide to become a member of Specialist Trading. These are all stocks, as you can see linked in here, how we would have gone short. Now we know a lot of stuff has happened with a lot of different stocks since then, but these were all signals that you would have been able to trade and had successful trades with. The beauty of strategy number one is that it also works on different markets. Here's a 30-minute chart of the E-mini coming into the last, or I should say last week or the first week of June. These were all signals to go long using strategy number one. As well, you can apply it to the Forex markets. Here's the euro dollar on a weekly time frame. Euro dollar had a great move to the upside, and look how we picked the bottoms on these. Now remember, when we say picking the bottoms, obviously it goes against everything I just taught you today. So we're not trying to pick bottoms. What we're doing with this particular strategy is we are in sync with the trend, the overall trend. In other words, we are above the 50-period moving average, and we're looking to pick those bottoms in the pullbacks. So strategy number one is a great pullback strategy. What I shared with you today was a great entry technique for a type of consolidation pattern, for a continuation pattern. But strategy number one is entirely different. What we wait for is a nice upward move, and then we wait for those pullbacks or those sell-offs, as you see here in this chart, and that's where it generates a signal. That's a great, great strategy. I give you all of the rules: entries, exits, stop placement, different ways in which to trade it conservatively or aggressively. This is all in the video of this training session. Plus, this comes with much more probability trading edges, which we share with you. We tell you which indicators to use, which ones not to use. I go over in detail the difference between a system versus a strategy. I also share with you my #1 chart pattern. This chart pattern is something you should be looking for in every market, regardless of what you trade. Okay. Also, how to be on the right side of the markets, the complete rules to strategy number one, how you can apply this to any market, any time frame, and then lastly, my personal email address so you can contact me with questions whenever you'd like. Now, we roughly sold this for months on our sister site, Pro Trader Strategies, at roughly about $1,000. For all the attendees today, guess what? We're dropping this down to $37. I know it's hard to imagine, but that's how much we want you to become a member. So we're sharing this with you for $37. That's a 3-hour video that you have immediate online access to. And it's not something that dissolves after 2 weeks. This is yours to keep for life. So you have all this information, a brand new strategy, all these tips and techniques similar to the one I just shared with you for only $37. But this is for a limited time only. So if you're really interested, you see here where it says get the offer here, that's what you click on for the link to go to the special page and get all the information on that special discount. Remember, we, for months, if not the past year, sold this video seminar for roughly $997. We're offering this just for the attendees today for our affiliation with TradingPub for $37. But this is only for the next couple of days or so. So if you're really interested in getting more techniques such as I just shared with you today, as well as getting a full-fledged strategy that works tremendously. We've had people that pay thousands of dollars that are members of the course already. You can get everything for $37 on a 3-hour online video, which is yours for life. Okay, so once again, I want to thank all the people at TradingPub for giving me the opportunity to speak. And I'm going to keep this on the screen right now while I answer some questions. So Let me just go to the chat box here. Okay, Rob says, we shared only half a technique. Where are the exit rules, stop loss, and take profit? Well, you're right, Rob. I did only share. Remember, I said at the very beginning of the presentation, probably in the very first moments of it, I said I'm going to share with you an entry technique. All the other, we have hundreds of different techniques for selling, for stop placement, and I can probably tell you that one or two would be perfect for you, and you can get that information in the $37 discount. So I think for $37 it's worth it to find all the information. I've just given you a valuable tool that usually costs hundreds of dollars for free. So a skilled trader would be able to put together a strategy based off that. But if you want all the different edges, remember, this is not a strategy. What I shared with you today is an entry technique. So this is not a full-fledged strategy, just an entry technique. If you want more techniques so you can make up your own strategy, I would really suggest taking advantage of the $37, okay? Let's see, Glenn asks, where was the entry technique? Well, Glenn, that's what I just spent the last hour. This is going to be recorded, Glenn. I would suggest request a recording link of this so you can go over this. Steve is saying, is this a VCR or DVD? No, this is an online video, so you'll have it right on your computer. You can just simply upload it. You can be having it within the next 15, 20 minutes once you sign up, and you can be watching this 3-hour video right away and getting all these different tips and techniques, okay? John asks, does it work for options? John, we've seen there are, most of the tips and techniques we have are for stocks, Forex, and for the futures markets, but you can simply transfer over onto options, meaning that once you get a signal in these, you simply buy the actual option like a long call. We don't have strategies which have to do with, spreads and things of that nature. We don't teach those or trade those personally. But we have many traders who are actually option traders who love our strategies, and what they do is they use them, and then once you get a buy signal, you just simply go and buy a long call or a long put. So yes, they do work very well. As you see, they're highlighted. Get the special offer, click to get offer here, link on the side of your screen. So just simply click on get offer here, and that's how you would get that $37 deal there. John says, do we need any special indicators to implement the strategy? There is one indicator you need, but it's something, I don't want to go into detail too much what it is. That would kind of give it away and it wouldn't be fair, but it's virtually an indicator you find on just about every charting software package, okay? Very simple. And for $37, I mean, it's I think everyone can risk $37, probably less than the price of some commissions, I would venture to say. Yes, you can download the video on the computer. Let's see. Richard Hill says entry off of the 50-day simple moving average pullback. That's not part of the course. That's a different technique, but that's something if you like, that's fine. There's nothing wrong with that, but that's not part of the course, or that's not what strategy number 1 is all about. Okay. Ellie asks, does the seminar use candlestick charts? Well, we show examples of candlestick charts, but just to share with you, we see no difference in using candles as opposed to using open, high, low, close charts, or even some range bar charts, or even some Renko charts, okay? All we're looking for is specific signals, and then we enter using entry techniques. So it doesn't really matter what the bar is. Now we have one strategy, which is strategy number 5. It's probably our best strategy for trading the Forex that just goes off of a specific candlestick formation. But other than that, you can use candles, open, high, low, close, range bars, and any one of our techniques if you like, okay? It's more about either the pattern or the 1 or 2 indicators we're using that tell us when to get in as opposed to an actual candlestick pattern. Let's see. A lot of people, Steve says they're doing it, but it's not working. What you can do is, as you see here, I think Jana might have put up another link there where it says www.tradingpub.com/Primo. You can basically click on that link, and hopefully that will work, okay? But don't worry, if you have trouble, we'll have a way to be able to extend this offer for you. But for all the people that are really want to take advantage of this, this is just for the couple of days or so. I didn't get the last name, but someone asked, do you have a trading room? No, and without going too much into detail, once again, I've been trading for 37 years. I started out this presentation by saying the reason why most people lose in my 37 years of experience is because they're depending on outside sources. And it's just my opinion, once again, but I feel that trading rooms can become a crutch for many traders because they want to rely on what they're seeing the presenter do, and they want to just emulate exactly what they're. It's my philosophy to give you all this information, to trade with you side by side, to hold your hand, but to ultimately have you decide how you want to trade it and which parameters. We give you great techniques, but you can construct them to fit and meet your needs. So this is what we do, and this is why we don't believe in trading rooms or chat rooms, because we think that they turn into a crutch for the trader. I want you to ultimately take all the information and then not rely on any outside sources or any feedback to make your decision. Let's see here. Let's see, yes. Can this be used for intraday trading? Yes, John. I showed you just the last chart, the most recent chart. Remember, I showed you that was of today. That was today's chart on a 1,000 tick bar chart, where on the upside, before the market fell out of bed, you could have made roughly about 5 or 6 points trading the E-mini. Okay, that's $300 per contract. So yes, it works intraday, weekly charts, daily, any time frame. Okay. Will you mail the training session? No, the training session is strictly online, so you can get this immediate access to this, okay? Once again, we've put up another link for you right here, as you can see right there. Maybe a little simpler to try on this link, okay? This link maybe work for all the people trying to get in. Go through and see some more questions. I'm sorry if I happen to skip some people's questions here. We're just getting inundated with a lot, and I'm trying to get them as best as possible. I know some of you were having trouble. Once again, if you happen to see that right there, I believe Yana or Raleigh has put up a brand new link, which starts out with a BIT. That will probably be easier to get in to get that special discount. John says, you mentioned strategy number 1. How many more strategies do you have? John, we have upwards of 10 different strategies, all different market environments, all different ways to trade either the stock market, the forex market, or E-mini intraday. Okay, so these are great strategies. What we do is, on my site, which is Specialist Trading, we give you the full enchilada, the entire work. In other words, we have upwards of 10 different strategies, and it is an entire course, pretty much similar to a mentorship. So you get all that information. And this is rather expensive, though. It can be upwards of anywhere from $2,500 to $5,000 or $6,000. So what we do from time to time with our sister site, Pro Trader Strategies, is we offer individual things such as what I'm sharing with you today, just so that we want to help people who know that they can't afford thousands of dollars can buy individual strategies at one time only, okay? Judith is asking for a recording. Yes, if you just contact the people at TradingPub, I believe this is recorded, and you'll be able to contact them and get this recording, okay? Will it work on the oil future market? Yes, it does. In fact, I'm sorry I didn't provide any examples in crude oil, but yes, it would have worked fantastic. Crude oil and heating oil have had these nice rises up, and you can get some nice, you would have had some really nice trades in the so-called overbought scenarios of those particular markets. So yes, in any market that has a so-called overbought, oversold scenario, it will work because we're just taking advantage of that. We're just exploiting that. Okay, so it really doesn't matter what market is or what time frame. We're just exploiting what conventional wisdom states, and conventional wisdom states, you know, things must stop at overbought, oversold. Now, if they stop and we do get a top made, well, that's okay. That's our top that we want to look and see that's going to be violated in the near future. If it doesn't never get violated, well, then we don't have a trade. We didn't lose any money. All right. But if it does get violated, most likely it's going to continue up higher in the more oversold area, and we're going to be on board already. Okay. All right, let's see here. As we stated, with the link that says BIT on it, that should be working. Okay. Let me see if there's any more questions. Yes, some people are saying this is extremely cheap compared to some other things. Yeah, because we want, you know, as I stated once again in the beginning of the presentation, we are first and foremost an educational company. It doesn't do me any good to just come out here and try to sell you something for thousands of dollars, and you don't understand the process, you don't understand how to do it, you don't understand what it's based off of, and you don't understand that there's any sincerity behind it. It's more just a vendor trying to sell his wares. We're really trying to educate you. So even if you don't want to take advantage of the $37 deal, that's fine. You got a great technique today for entry on how to trade tops and bottoms. You can take that with you, okay? And that is worth its weight in gold, in my opinion, because this is really what saved me from becoming a losing trader for trading tops and bottoms. So even if you decide not to become a member of Specialist Trading and pick up this discount price of $37, you still have some great information today that you can use, okay? It just really shows our sincerity and where we're coming from. People are asking, how do you enter and where do we exit? Remember, once again, this is all in a $37 course. We just showed you where these entry points would be. We have a number of different entry techniques which we share with you in that, and you can apply this to any strategy you may have. One of the best things about the course is I give you so many more detailed tips and techniques like I just shared with you. You can apply them to a strategy that you currently have, and in my opinion, it will increase your odds for success and consistency in that strategy. So even if you get strategy number 1 and you trade that, you can still apply all the different techniques I'm going to be sharing with you in this training session to something that you're currently using. And I feel it will really increase your odds for success and elevate your trading even more, because these things have stood the test of time, okay? We just have time for a few more questions before we have to click here and sign off, but please remember, if you're having trouble with that, I believe they may have posted the link that works much better here. As you see, it starts with BIT. And yes, this is being recorded. And what I want to do here is, if you have any more questions, I want to leave this slide for just a second. And for more information, because I realize we had so many questions being asked, I may have skipped over some. This is our information for our sister site, Pro Trader Strategies. These are the people that sell and monitor and market each one of our individual strategies. So you can contact any one of the trading consultants at trading@protraderstrategies.com with a question. You can send them an email, or you can call them directly at area code 310-598-6677, and we'll answer any question you may have. And if you can't get those links to work, don't worry, they will set you up with that $37 deal, okay? This is for just one more piece of information if you weren't able to get the links working and you want to ask a few more questions. But please remember that discount, $37 down from $997, is only going to be for a couple of days. So I think it's really well worth your advantage to take advantage of that, just for that very inexpensive price. Okay. Let's see. A couple of years. Someone is saying something. A couple of years. I'm not sure exactly. Dan is saying, do you have any courses on sideways or choppy markets? You know, we don't have strategies that trade those, because remember, we're trying to be consistent, and the best way to be consistent is to be in sync with the overall trend, okay? Now, when you have choppy or sideways markets, there is no trend, and so there's not a lot of consistency there. The best thing about our strategies is that because of the tools we use and the things we teach you in the courses, they will keep you out many times of these choppy, rangy markets, which are really the markets that create the most confusion and create the most losses for traders, because you get whipsawed. So our strategies will keep you out of them oftentimes. You know, it's not guaranteed. We're not going to promise you that you'll keep out of every choppy market. But the best thing is we look for these nice trends, as you just saw in these examples I showed you, and we try to exploit them and take advantage. Now, this was an entry technique I showed you today for a continuation market. We also have pullback strategies where we look to get even less expensive prices on a pullback within the trend. So we have a number of strategies, but the basics things are that we are looking for a trend, and then we're looking to get along some type of way within that trend. So these tips and techniques will oftentimes keep you out of rangy markets, okay? If you have any questions with technical issues, once again, the people to contact is right here, the website in front of you, or the email address. Just contact the trading consultants. They can solve any technical issues for you, or you can call them directly and they'll solve anything you may have, okay? Time for one last question here. Richard says, no money made in congestion. Yes, it's a very wise statement. I mean, there is money made in congestion, but once again, we're looking for consistency. And most of the time, you'll make money in congestion and then give it right back on the next couple of trades. So we don't really look for congestion. Most of our, as I said, methods will find a way to avoid that congestion, okay? As you see here, Yana just posted, once again, the training session offer with the link right there at the very bottom of your screen there. That's like the correct link I believe, to use. If you have any questions, if you're not able to get it to work, you can go to the trading consultants at Pro Trader Strategies. Just simply email them at trading@protraderstrategies.com or call us directly, 310-598-6677. Okay? I think that brings us right about to the end. I just want to thank everyone at TradingPub. Thanks to Raleigh and Jana for giving me the opportunity to speak, and thanks to everyone today for attending. I really appreciate it and look forward to everyone taking advantage and becoming members of Specialist Trading. Thank you so much.
Time.